New purchase contracts and closed sales are officially up like 100+% so far this year in Highlands Ranch. Hey, it's Sean Reddy, Keller Williams Reddy Group, and welcome to our Highlands Ranch Market in a Minute, where we dissect the real estate market stats in Highlands Ranch for month over month, year over year, and then we even take a look at a longer term or longer runway perspective type graph. So you can, essentially I make these so that if you are just curious about what's happening in the Highlands Ranch real estate market, or you plan on entering the market either as a buyer or a seller or both, hopefully this helps you know when the right time might be for you. And we're going to look at this again month over month. We're going to look at it year over year, longer term perspective. And this is the first time making this. Typically, I'll just make this with a bunch of graphics popping up with some of these stats. Yet, I figure for my visual learners, this would be a great experiment. So you're just essentially looking at what I'm looking at. This is what I'm reading off of when I make those videos anyways. So it's not the prettiest spreadsheet. That's fine. Yet it's what's effective for me. And you probably noticed the color coding. Color coding is simple. If it's a green cell, that trend is moving in direction of a seller's market. If it's a red cell, it's moving in the direction of a buyer's market. If it's yellow, it just didn't move month over month. So first thing you probably notice, there's more green than anything else. That has been true for the last couple months. Check out some of these metrics that are moving towards seller's market. First of all, new purchase contracts, as I mentioned, up over 100% since the start of the year and 35% month over month. Third straight gain after a 38% gain in February, a 30% or 31% gain in January. So huge gains. 166 homes went under contract in March in Highlands Ranch. That does count single family homes, townhomes, and condos. Closed sales up 40%. Second straight month of increase there after a 20% bump last month. Average price, look at that, 10% jump. Now, does that mean that all values in Highlands Ranch jumped 10% last month? No, of course not. This is only measuring the 109 homes that closed in March compared to the 78 that closed in February. In fact, before that, there were like 4% drops in prices, 5% increase, 10% drop. So it's only capturing in a bubble what closed in that particular month. We'll look at what that looks like from a year over year standpoint here in a second. However, up is up, and up is a good thing if you're a seller. That's why it's green. 10% jump translates to an almost $809,000 average selling price in March. A $735,000 median selling price in March, and the median sold price to list price ratio jumped up 2%, big jump there, almost 2%, to over 100%. That means that half of the homes that closed for basically 1% over asking price. That's pretty big. So we haven't seen that going back here since October was 100, since July of last year. All right, so let's flip it around. What's going well for buyers? Well, new listings and available homes are both up for the third straight month. That's a good thing. That's more choice. We'll talk about that here in a second. New listings up 21%, third straight month after a 45% increase and a 186% increase in January. While total inventory, that's everything on the market that isn't sold, is up for the third straight month, up 13% this month. I didn't talk about average days on market. That dropped 34% last month. We started the year with 54 average days on market. We're sitting at half that now at 23 days. The median days on market measures between listing and going under contract, by the way. That didn't move. So 7 in February, 7 in March, 32 in January, 54 in December. So you can see the movement over time, which we'll look at. All right, so year over year. Remember that most of these do favor sellers. That's why they're green. But let's check out the year over year. March. There we go. A lot more red here. You know what? A little bit more red. It's about 50-50. So let's start with the metrics that are favoring buyers year over year. I talked about lower market times month over month, yet significantly higher market times year over year. Last year, this time, you can see how quickly homes were moving, 11 average days, 4 median days, 110% increase in average, 75% increase in median. Now, 75 sounds big. Keep in mind, we're talking about 3 days, not the end of the world if you're selling a home. I'm sure you're not going to be pissed off if you get a great offer in 7 days versus 4. Yet, reporting the numbers as they are. New listings up 70% almost. Last year, only 110 homes listed. This year, 186. Available homes up 79% year over year. So what does this mean? What do these mean if you are a buyer? Well, elongated market times means you have more time to make a decision naturally. Means that you have less competition, theoretically. You have more leverage, theoretically. Same thing with new listings and available homes. Less competition-ish. Well, we'll talk about that in a second. But more leverage when you're able to compare similar homes when making an offer. The last red piece here is the median sold price to list price ratio, down 0.02%. Not a big deal. Flip it around. Those metrics favoring sellers. These are kind of big. New purchase contracts up nearly 50% year over year. Closed sales up 18.5% year over year. Average price 5.6% up year over year. Median price up 12% year over year. So what's happening here? Well, you have, remember that lock-in effect that everyone talked about? Like, people just didn't want to leave their 3% rate to get into a 7% rate. I think we can start throwing that out the window a little bit, because you have more sellers entering the market. You have more buyers entering the market than this time last year. Granted, rates are down like in the 6 3/4 range versus 7+, like they were this time last year. However, I think people are just kind of shaking that off and just getting over it and getting on with life and moving. So more happening, which year over year, you could technically label this as kind of a balanced market between buyers and sellers. Now let's look at a little bit longer term perspective here and a few graphs to show you as we wrap this up. Okay, the first one here, average days on market in the blue, median days on market in the red. You can kind of see, you can see the trend lines here. The market times go up in the winter and then fall sharply in the spring. And the same thing looks to be happening here. The median pretty much on par of last year, and the average getting there, still a little bit higher. This one, I know it might look a little confusing, but this measures new listings in the blue, available homes, like total inventory of unsold homes, in the red, and new purchase contracts in the yellow. Couple things to point out here. Last fall, we saw inventory like we haven't seen in years, and I started keeping this in August of 2022. But even if you took that back in time, you'd probably have to go back to like early 2010s to see numbers like that in terms of available inventory on the market, but barring new construction, because there was more new construction at the time. But you had numbers in the low to mid 2s in terms of total inventory. And then right around October, November, December, that dropped down to kind of more average-ish levels. Now it's gone up since then. You can see where that line's going. New listings pretty much fell off a cliff after April last year. Every single month was a dramatic decrease. And then that V shape started right in January of this year. So new listings are starting to trend way up. 186 last month. Last year, can't see the number, it's buried, but it was somewhere less than 123. So more new properties hitting the market. Probably expect that number well into the 200s in April. We'll see. And then purchase contracts. These are buyers actively putting homes under contract. Highest it's been measured in this little 2.5 year graph here. So have no real perspective on that. And let's see, this would be April of last year, when it peaked out last year at 151. April of the previous year, 149. So we're well above that already. expect that trend to continue at least into April-May timeframe. So not a bad time to be a seller in Highlands Ranch. All right, closed sales trending up. You can see the peaks and valleys there. We draw that back to, kind of right on par with where we were last year at this time, and expect that to continue with the dramatic increase in purchase contracts. Now, average and median price. Average is in the blue, median's in the red. The red's less susceptible to like a huge sale throwing off the average one way or another. But you can see kind of where they're not, can't really call it trend lines per se, but they do seem to be a little bit higher in the spring months, as you'd expect. And then median sold price to list price ratio. Not really any trend lines here. Every month's going to be its own kind of little vacuum in terms of what sold in that particular month and what was the median sold price to list price ratio. So I'm not really drawing comparisons from previous Marches, but you can see where maybe we will see a trend. Maybe we'll see that number continue to go up. I doubt it though, just because of the sheer volume of new listings hitting the market, serving as competition for other sellers. But anyways, there you have it. If you've made it this far in the video, either you really, really like stats, or we may be a good fit to work together for your real estate goals in Highlands Ranch. If that's the case, let me know. Drop a comment. Reach out to me on social. Again, Sean Reddy, Keller Williams Reddy Group. Highlands Ranch Market in a minute. We'll see you next month.